Welcome to the Trading Journal, guys, where we take high volatility stocks and make money trading them. Now, if you're new to the channel, we blew up our account a few days ago. We lost over $27,000 in one day on some bad trades and bad entries and exits and some technical errors. But today we are bouncing back. We are going into day 2 of our challenge and we are locking over $1,430. Now, today was a little bit choppier and it took a few trades to get to this point. It wasn't a clean trade. We actually had to take 5 different trades where we actually lost some money, gave back some money, but we ended the day green, $1,430. In general, it was a really choppy day for me today. I held some stocks a little too long, like AZI, where it retraced the move and I gave back a lot of profit, and ZYBT, where I just could not hold it long enough to capture the end of the fade. Meanwhile, we have other stocks where I traded, like MB and YJ, where YJ I got chopped on the long side and the short side, taking a double whammy on the stock. MB was a little bit cleaner. We managed to bottom tick that stock and we scalped a little bit into the halt. And our last trade that we took was HUIZ. This is another Chinese ticker that went up on absolutely no news. Parabolic squeeze on a halt up and down. We managed to scalp a little bit of money on that trade and we ended up with $1,400. Now, today has been a really choppy day. If we held on to our positions or if we managed our exits a little bit better, it could have been another $2,000 day. But you know what? It's a green day. With a small account, we have to be happy with our profits, especially with the week that we've been having. So let's get into the trades. Green $1,400, 5 tickers. Let's break them all down. All right, guys, welcome to the recap. Let's break down our first trade of the day, which is AZI. Now, this stock was running on Thursday and Friday. We managed to make money on both days. Our Friday setup was a little bit choppy. We managed to get in at a decent price and we managed to bottom tick it. But unfortunately, on the way back up, we couldn't lock it all in. We actually were green over $900 on this stock on small size. But after the retracement and the dip, we got out, we got chopped out a little bit, and we only end up making about $480. So let's break down AZI because this was a little bit interesting. On Thursday, you can see that I was moving and it made this impressive push, makes a pre-market break of the pre-market high and pushes all the way to 250. We took this trade on Thursday and we saw it moving again on Friday. Now, my Friday setup was a little bit on smaller size, and the reason is because it's on SSR. Because this moved on Thursday and on Friday, and the stock is now on SSR, I expected a little bit of chop. But fortunately, you can see that after this initial green bar, this initial push, the stock never really had another chance. So let's break down what happened. When the stock closed, I actually expect this one to continue fading all the way back down to the 130 level. And it didn't do that. It opened on a gap down, very small gap down. And around 8 a.m., it started moving back up. You can see this initial push here, but it happened on no volume. The main push was this candle right here. You can see from this bar right here that it was the biggest green candle on the day. It was followed by a few subsequent red candles and a green candle. So let me see if I can get this correctly. Now, the main area of this trade is this block right here. So I cleared out all the lines. What you really want to see in this block right here is that this line, this area here between 170 and 190 is essentially a mini consolidation. Now, I talk about this a lot, and one of my absolute favorite setup is the retest. So when this stock makes the initial push all the way to about $2.20, we can see that on the day, it did not break yesterday's high. And it flushes immediately below $2 all the way down to about 160 level. And this green push was very, very weak. It happened on very low volume, and you can see from this bar right here, it was only a very small green candle. And the next candle that occurred left a massive wick at the top and an immediate rejection. So I started my initial short position around this area here. My favorite setup is after you see a push and fade, I want to see a retest. Ideally, I want to see a retest and breaks this $2.20 high by a few cents and flushing right back down below $2. But this stock was so weak that after I saw this initial green candle and the next push after, it rejected and continued fading. So I shorted in the 180s and I added to my position in the 160s. So I held my position into the market open and I covered a little bit in this area right here. But unfortunately, after this initial push, I could not hold it. Now, you can see that because of my average in the 170s, it was okay. And this top right here, the real-time market hour top around 180, that was my max risk level. It didn't break it, it made a double top, and then it slowly started to roll over. So after this drop right here, I got out the remaining position in this area right here. So my average exit was actually about 160. I got a tiny bit in this area here, and the rest of my exit was in the 161 to 163. And it was kind of unfortunate because I should have exited my entire position on the breakdown below 150. But my initial thought at the time was I thought this was going to continue lower and hit the 130 level, because even in the pre-market, it didn't break the 130, but it held the 130 to 140 level. And after this big red candle on this big drop, I expected to fade lower, but once volume dried up, that stock was finished. It kind of chopped me out. It took away half my profits, but at the time, we weren't really paying attention to this because we're trading the next stock. It was ZYBT. And ZYBT was a little bit interesting because this massive push all the way to 360 and the rejection was so crazy. If you look at the volume, this red candle overshadows every single candle on the day. And this mini red candle was on such small volume. So I'm not sure about the news on this stock, but I don't think there was any really material news. And you can see that pre-market high right here, around $2.68. And the mini consolidation level was around the 250 level. So my initial thought when I saw this massive push and rejection, I think this was actually a false halt. It tried to false halt at $2.50 and it pushed back up. So once it pushed back up, we all know that to halt a stock, it needs to hold that price for a period of time. And because it didn't do that, it pushed all the way back up to $3. And this is the bread and butter of most of my setups. Once you see a push and a huge rejection, on the retest is where you want to get in. This retest also left a massive wick at the top right here. And because of that, I shorted into the fade in the 260s. And my risk at the time, I was thinking, well, it got below the pre-market highs, is rejecting the top around this 280 level here. And on this flush, I exited my position between 220 and 230. Now, I can see that it went all the way to a low of $1.68, and I wish I held it, but this trade, in my opinion, was a pretty good trade, considering the fact that I was also holding on to AZI. Now, this one held the pre-market lows, and that was around $2.10. I think my absolute best exit, I had about 200 shares where I exited in the sub $2 level, but for the most part, my exit was in the 220s. So that was my second trade, and I made about $750, putting me at this point around $1,200 green on the day. So the next stock that I traded was YJ, and this stock was so incredibly choppy, I actually lost money on the long side and the short side. It was really unfortunate because on this initial squeeze here, on this curl, I was expecting this pop here. And because I didn't get it, I actually ended up holding it a little too long. So I got in for the break of this candle right here, around $7.90, $8 mark. And when I bought the stock initially, it made a peak all the way into the 950s. I held it. I held it. My average, I think, was around $8.15. There was a little bit of slippage, but I bought it for the break of A. And by the time I actually added, because I don't have hotkeys, and I added to my position, and on this flush right here, I got stopped out. If you guys know, I am not a predominant long bias trader, and this wick stopped me out, and I actually ended up going red. So my next trade that I decided to take was I went short. So after it rejected the bottom and bounced up, I saw this. I said $8.30 is now a pivotal level. I know it broke it momentarily, but this $8.30, if it can break down below it, this stock is finished. Unfortunately, if you want to draw trend lines, we are still on the front side of the move. And I completely missed that. It was a momentary lapse in judgment, and I actually ended up losing and got myself short squeezed. So a few days ago when I blew my account, I lost about $3 per share, $27,000. So today on a stock like this, I made sure to go in a lot smaller. And when I started my position, I shorted again around $8.50. But I made sure I did not add to my position. My initial risk was the top of this candle, about $9.50. But this squeeze happened so fast, I could not exit in time. And because of the slippage, I think my exit was actually a little bit over $10. So this break of $9.50 happened so fast. When I marketed my order, I got filled around $10.30. And on this trade, because I took such small size, I ended up still losing about $400. So at this point, I stopped trading this. This was actually a halt. I'm not sure why it's not showing, but this $10.90 was a halt, and it opened up higher, made a push, and then flushed down into a halt going down. But I didn't really want to trade it anymore, because when you get chopped on the long side and the short side, you are really tilted. Because if I held on to my long position instead of getting out at the very bottom, I would have been green. And then I decided to take a short position, and then I get squeezed. And then it gets halts going higher. And after the halt resumes, you can see it halts immediately, coming right back down. And because of this choppy action, I did not want to take a third trade. So I'm already green about $1,200. And on this choppy action, on the halt going up and down, on the buying and selling of this stock, I gave back half my profits. So at this point, I was more or less done. I said, it's Friday, I gave back half, I don't want to give back anymore, and I'm going to risk going red if I continue trading tilted. So I left the stock alone, and you can see that it comes all the way back down to about $3. So it's really disappointing, because I could have made $5 on the way up and $5 on the way down, but my timing was slightly off. I was so close to getting the backside, but I was a few minutes early. If I got out after this, I would have been okay. But because I got chopped out, I decided not to trade this. The next stock I traded was MB. This one was really interesting as well. It made a massive push. It started about $3.50 and went all the way in the pre-market to about $19. And you can see that it made a double top into a halt at $19, and it opened lower. It opens lower. So when you have a stock like this, where it's making a double top in the halt, it's very dangerous, because I promise you, going into that halt, everybody expected the stock to open higher. And a lot of people bought into this, expecting the stock to open higher and rip higher. Because lately, a lot of these Chinese stocks are moving up on absolutely no news and getting short squeezed. Shorts are getting squeezed to oblivion. They're moving up 1,000%, and everybody who bought this into that halt, up into that resistance level, is looking for a continuation higher. And the problem was it opened lower. Because it opened lower, all those people who bought it, they're trapped. And people who shorted early, well, guess what? They're exiting their position if they have not already exited their position, because nobody wants to be in a short position going into a halt, going up, halting at the pre-market high. So because of this logic, because of this psychology, all the longs, all the shorts, when this stock opens lower, are panicking. And you can see what happens right after. It continues lower. This stock, in the span of 15 minutes, made a high of about $20 and a low of $12. That's an $8 swing in the halt. That is absolutely insane, which is consistent to what we've been seeing lately. But if you're in this stock, you are not having a good time. So I actually took a short, not in this area, but I shorted down lower, close to around $8, $9, and I got the stock halting, going down. But as soon as I realized that when the stock halted going down and it did not open lower, I got out. So on this stock, I saw the breakdown here, and I realized that I missed my entry. So I got in around this rejection candle right here at the bottom of it, on the solid red candle, on the breakdown below $9. My average was in the high $8, around $8.75. And on this flush, I got out because this was a halt level. I don't remember exactly where on this chart, but there was a halt. And when the halt reopened, it did not open lower. Because it didn't open lower, I had to get out. The reason is because everybody shorts into a halt going down, expecting it to open lower. If none of these occur, they're going to exit because their edge is gone. The volatility is not in their favor anymore. So that's what I did on this stock, and I managed to recoup most of my money that I lost on YJ. Now, I tried to continue trading, and the last stock that I took was HUIZ. This stock was absolute madness. I actually really wanted to short the stock in this area here, but it doesn't show on this chart, but all four of these candles were halts. It halted going up, it halted going back down, halted going back up, halted going back down. And it was so insane that I sat here for probably 30 or 40 minutes doing absolutely nothing. The stock was behaving insane. It wasn't rational. It was halted all the way up to 290, and as soon as it opened, flushes all the way back down to 220s, and then when that opened, it dips to about $2, halts going all the way back up, and it just continued the cycle for about 4 or 5 candles. And I was sitting here watching. It wasn't a standard 5-minute halt. These halts were getting extended to about 15 minutes, and I really didn't even want to trade this. By the time I took my first trade, I got in at such a bad average, I knew it was time to pack it in. So on this chart, my entry was actually in this area right here. I got in the 168. This stock was so choppy, it false halted. I got in 168, it flushes down to 150, it's halting, but I noticed that the ask was getting smaller. The size on the ask was being bought up. So I immediately exit my position. It pushes higher back to the 180s and dips right back down into a halt after about 10 minutes into 137. And I added into that halt in the 140s. And the same thing happened where the stock did not go lower. It didn't open lower. It actually opened higher, not much, but slightly higher. And because of that, I got out of my position. So lately, what I've been noticing with the market is a lot of these halt levels are not being respected. When a stock is being halted on the way up, sometimes they don't continue higher. And when the stock is halted on the way down, it doesn't continue lower. And there are so many Chinese stocks moving with no news, no catalyst whatsoever. And because of that, if you are trading these, you have to be very careful. So I hope you guys enjoy the video. I hope you guys enjoy the recap. Please like, comment, and subscribe. And I'll see you guys for our Monday recap, continuing to day 3 of our small account challenge.